I have a question for you. How many indicators are you using to trade? If the answer is more than 2, that could be the reason why you're losing. I know that goes against the trading information that's out here online, but the use of lagging indicators is why most traders are struggling. Hear me out. Hear me out. I got another question for you. If you need to make a split-second decision, is it best to make that decision based on past data or current data? Well, current data. It's best to make that decision on current data, yet people make entry decisions, trade decisions based on lagging data that they get from lagging indicators. So before this video is over, I'm going to prove to you that you only need one indicator to make a decision on what's happening in the market right now. In trading, simple is always better. But the unseen hand wants you to think that trading is very complicated. And they want you to believe that trading is very complicated so they can sell you their new shiny indicator package, which in most cases is just garbage because most indicators lag behind the current price action. So they're useless, they're garbage. But the industry wants to feed you this bad common trader knowledge, and they want you to take the bait so you can stay a struggling trader, and the banks and big institutions can keep taking all your money in the trading arena. So today, please allow me to share just a little bit of indicator wisdom with you so that you can begin to increase on the sudden. Let's go deeper. All right, guys, let's jump in. So here we are on a what would be called a clean price chart, right? We're on a clean price chart. We have absolutely positively no indicators at all. I'm first going to show you how you could trade profitably with no indicators at all, right? You actually don't need any indicators whatsoever. There's plenty of books out here where people don't use indicators. If you ever read Naked Forex, the whole thing is about they don't use no indicators at all. The author, his name is slipping my mind right now, the author of The Best Loser Wins, he points out he doesn't use any indicators, right? As you mature in your trading journey, you will find out that a lot of stuff that you learn in the beginning is useless, pointless, and it just has no merit. So real quick, without any indicator at all, let me show you how you could trade a market. This is the ES futures, no indicators. Watch this. It's so if you just can understand levels, right, where prices have been bouncing. Look at this low right here. Prices have been bouncing right here at this low. You could simply say, if prices come to this level again and I get a bounce, I'm going. You could go, hold on, let me get my tool up. You could put this line right here. You see we almost came. So you see that this area there's buyers sitting here. So look what happens when you get right here. Bam, you go, right? That's a pretty good trade. I mean, you would have entered it around 52.60. This thing went up to 32.20. Hey, that's a big win. That's a big win. And you didn't use any indicators at all, okay? You do not need indicators. I mean, you could just draw lines. Let's put another line on here. You could trade with nothing but horizontal lines if you wanted to. You really could. Put a line up here. I move this down to this body. You could do ranges, basically. You could just trade the range. Look, you had this box here, it dropped. It came back, it touched again, could not go any higher. You go right here. Bam. You ride that sucker all the way down. This is trading. Why? And it's simple. It doesn't have to be hard, right? You located an area where there's a lot of demand. Up here, there's a lot of support. Or some would say there's a lot of resistance up here. I like to say there would be a lot of sell pressure up here. There'll be a lot of buy pressure down here. Either way, there's a whole bunch of buy orders sitting in this area. And anytime prices come back here, boom, it's going to shoot up. So, hey, listen, you do not need indicators. All right. Now, there is one indicator, though, that I use. All right. This is the point of this video here. I do use an indicator, and it's pretty much the only one I use, and it's the only one you need. And the reason I use it is because it's going to tell me the direction of the market. So let me do my foundation for those of you who are new. This is for you. For those of you who on the channel Subscribe. You know, you've seen this before. Just bear with us. You know, I gotta lay the foundation. Now, here's the thing. Here's the key. You could learn about all these indicators when really all you need to learn about is the market cycle. And all you need to know is that the market moves in a cycle. That cycle is trend up, trend break, retest new high, or trend down, trend break, retest new low. That's it. The market moves in that cycle all the time. Look, here it is. Trend down, trend break, retest a new low. Okay. Here we go. Trend up, trend break, retest a new high. All right. Here's a little boy. Trend down, trend break, retest a new low. Okay. This boy is just kind of trucked. And currently, I don't know. So you see that? So you see that that market cycle is happening all throughout this price chart. All right. So if you can understand that the market moves in that cycle, that alone, again, trend up, trend break, retest, that alone, again, you wouldn't even need an indicator for that. I wouldn't even need an indicator for that. If I just followed that, look, let's grab what I want to grab. Little baby horizontal line, little line, right? I could just draw a line like this, wait for a break, and I would know like, yep, let's catch the second leg. Boom. I could just draw lines like that all the way, all day, every day. No indicators needed. This is indicator wisdom, people, that you don't need indicators. Let's see here. Let me grab another line. Like right here, I could just, here's a clear trend up, bam. Trend up, here's a trend break, and I came back pretty hefty, but it's still, bam, up to a new high. So the market cycle is everywhere, okay? So since I have this foundation of the market cycle, since I have a foundation of how the market moves, that allows me to see certain patterns, see certain entries, because I have this foundational knowledge that the market moves in twos and it moves in a cycle of trend up, trend break, retest new high. So with just that, right, I don't even need indicators just because I understand how the market moves. And this is what people don't teach you. This is what the bad common knowledge I hear is they're never teaching you that it's this simple. Nobody has taught you that it's this simple. Have they? No. Everybody else teaches you to put on 5 indicators and try to keep up with all 5 and make trade decisions based off of that. When you could simply just go with the natural flow of the market, which is trend up, trend break, retest, trend down, trend break, retest. Let's range for a little while. Okay, let's break out and do it again. Trend up, trend break, retest. That's the flow. If you can understand that flow, everything changes, all right? So, but now let's see how once you add a 21 EMA, it just allows you to see the natural flow better. All right, let's slap that 21 EMA on now. Indicators, we need a EMA, and I use the 21 EMA. Not to say it's the only one you could use. It's the one I was introduced to. It's the one that I've used on every price chart in every market I've been in, and it's my best friend. Okay, let's go back. Here's my trading best friend. Let's see. It loves me and I love it. Let's see. Let's make it a little wider so we can see here. Okay. So the 21 EMA, why are we using it? We're using it for direction. So the rules are simple. The rules are so simple. If you are above the 21 EMA, chances are you're in an uptrend. Simple as that. If you are under the 21 EMA, chances are you're in a downtrend. Okay? That's simple. If the 21 EMA is looking like a roller coaster, like so, chances are you are in a range. Okay? So right out the gate, we already understand that the market can only do 3 things. It either is ranging, moving sideways, it's trending up, or it's trending down. It's the only 3 things the market can do, okay? Therefore, the 21 EMA allows us to see which market condition is present currently. All right. Everybody say currently. And that's the difference between using a 21 EMA and every other lagging indicator. Because see, this 21 EMA is letting me know what's happening currently. Currently, we are above the 21 EMA. If that holds, I would know that we are in an uptrend market condition. Okay. Now, let's go back to how we was adding those horizontal lines a minute ago. Let's say, we consider this to be kind of a top, and we consider where we just came from to be kind of a bottom. If you look at that, hey, look, I think we could possibly be in a range. We got 4 touches at the bottom, 1 touch at the top. If we get another touch at the top, that will confirm this range. And if I was to get a signal candle here to go short, boom, I would take it because I'm in a range. So I would expect prices to come back down to the bottom, go back up to the top, because a range moves. The natural flow of a range is just to the, it's just to the top, to the bottom, to the top, to the bottom. That's the natural flow of a range. And if I was trading this, that's what I would be looking for right now. But you see how the 21 EMA makes it clear. See what I'm saying? The 21 EMA is making it clear to me that the current market condition is a range. All right. If it was really trucking, we could tell that the current market condition is in a uptrend or downtrend. Let's go back, see if we can find some old history. All right, right here. Let's get these off. Right here, we are above the 21 EMA for an extended period of time. We are in a uptrend. I would know that the current market condition is an uptrend, and all touches of the EMA is a go. Go right there, go right there, go right there. All those are wins because we understand the current market condition. So I don't care what any old indicator is lagging telling me. I can look at the 21 EMA and tell you what the current market condition is. All right. So the beauty of the 21 EMA is that this works on any price chart. Let's just take a tour real quick. All right, let's go to a day chart. That was a 1,000 tick chart. Now let's just go to an old school day chart. I said old school day chart. It ain't really old school, it's just a day chart. Okay, if you see here, what's currently happening in the world right now? What's currently happening in the markets, right? Everybody already knows because of the Trump tariffs, the market is crashing, right? We all know this, right? Here's what I'm trying to tell you guys though. I knew it before it happened. And I can prove it. If you go back, I would say 3 videos, you will see a video that I told you that we've had a trend down, trend break. No, that ain't what I said. I actually said what we have here. We had a low in place. I said we got a push up first entry. I said we had a push up right here is a second entry short. And I said it was working because of this candle right here. That's what I said. And I told everybody we could expect another leg of this distance right here down. That's what I said. That's what I said. And look what happened, people. We got it. But what I'm trying to tell you is that I didn't need an indicator to see that. I didn't need the news to see that. And matter of fact, I was 1, 2, 3 days ahead of the news. You know what I'm saying? The news told you that we was crashing once this happened. I already knew it was coming 3 days prior. How did I know that? Because of the 21 EMA. On the day chart, we were already under the 21 EMA. We had already had a leg down. I had a price action entry, second entry short, off the 21 EMA, my best friend. I knew this was coming. I didn't need news. I didn't need CNN. I didn't need any indicators. I didn't need any form of bad common trading knowledge that makes traders struggle. I knew this was coming beforehand. I've already proved it. I got the evidence. Check the receipts, right? I was 3 days ahead of the drop, and then it happened. Bam. Okay. But why? Because I understand the market cycle. Look at the market cycle, people. Trend down, trend break, retest a new low. Not only that, to go even further, then I said, Because we've had a complete market cycle. Look, the next video I said look to go up, and I was 2 days ahead on that. We had this candle, and then we had a 500-point day. I called that too. Okay, how did I call it? Because I had a complete market cycle, trend down, trend break, retest a new low. We were I called it a state away from the EMA, so I knew we were gonna act as a magnet and come back to my best friend for a touch right here. All I'm saying is, if you understand the market cycle, you understand the rule of two, then the 21 EMA is all you need. And it don't matter whether you want to trade a day chart, a tick chart, an hour chart, right? Let's go somewhere. Let's keep trucking. Now, this I haven't even looked at, but I already know price action is price action. Let's change assets. Let's pull up, and I don't have it here. Let's try to pull up NQ. Let's see. Oh, NASDAQ, right here. You know what, I can do it a quick way. Let's just do this. Let's pull up NQ, and let's go to a, which I wanna go to. What people be trading mostly? Hour. Is this it? I don't usually trade the NQ, so I don't know if it's supposed to look like this, but I can read the price action. I see that we're above the 21 EMA, and look at the EMA straight across, that we're in a range, right? Take the range breakout. Let's see, let's go somewhere else. Let's go to a 3,000 tick chart on the NQ, see if it looks better. Oh, we can pull up gold. Yeah, let's go look at gold. Everybody loves, I know people love trading gold. Oh yeah, the NQ is in a range. You know how I know the NQ is in a range, people? And you guys see how I saw that at a glance, right? Because the EMA is looking like a roller coaster. So I already know that the NQ is ranging. So guess what I could do? I could just box it up and wait for it to break out. I actually would go off of this low, and I'll take it all the way up to this high, and I would drag it over, and I would patiently wait. We're currently in the center of the range where you do nothing, because you could get chopped to pieces, which is where most traders get chopped to pieces, because your indicator is telling you to buy right now or sell right now. Your indicator is telling you that this market is oversold right now, probably. But what's the current market condition? The current market condition is that this market has been so wild this week that it's Friday and it's decided to just take a break and move sideways. It's been moving sideways since, like, it's 1 o'clock in the afternoon right now. It's been moving sideways for since the market opened. So it's putting people to sleep. I still wouldn't be shocked if this thing take off and run today. But right now it's just chopping people to pieces. But what's really happening is some bank is loading up. Somebody is loading up, and when this breakout comes, it's gonna be glorious. I'm sorry, I started thinking about the current trading situation. Let me get back to this video. Please excuse me, people. Let's find gold. I don't know if this contract is still available. It's probably not. What would be the next contract for gold? I don't know. 2, would it be 5? Nope, that's invalid. I don't know what the current contract for gold is. I'm sorry, y'all. My demonstration here is kind of going left. I didn't pre-plan this. Let me pause and get a real chart up here. Okay, we got something loading here. Maybe we cooking here. All right, all right. So yes, we are cooking. Well, I guess we know what's happening, right? I mean, all you need is the 21 EMA. Can anybody tell me what's happening on gold? And yeah, I guess we do know that because gold has been making all-time new highs. We are in a strong trend for gold. I can see that at a glance because why? Because of the 21 EMA. So guess what? Any entries, and watch my last video on key entry points. Any of these are awesome places to enter the gold market. That's making all-time new highs. But again, do I need an indicator to tell me that gold is trucking? No, the 21 EMA is telling me that. So after this, I just need to know about key entry points, which is always going to be at the bottoms. If you're trending up, it's going to be at the top if you're trending down. And if you're in a range, it's going to be the top, the bottom, the top, the bottom, fade those. That's it. That's it. That is it. So, hey, listen, guys, trading is a lot more simple than they want you to believe. All right. For those of you who have found this channel, I pride myself on showing you how simple it really is. All right. Now, that doesn't mean that it's easy. What it means is that the concept of trading is simple when you eliminate all the noise, which would be the 1,000 indicators that's trying to stuff down your throat to keep you as a losing trader. All right. So I'm not saying trading is easy. I'm trying to tell you that the basics of it, the fundamentals, are actually simple. The market moves in twos and it moves in a market cycle. And a 21 EMA is a great indicator to allow you to see that movement clearly. That's all it's doing. It allows you to see it clearly, and it also offers you great entry points to let you know where a key entry point is. So the 21 EMA, it's the only indicator you need. It's my best friend. You could actually win without it if you just understood the market cycle and price levels. You don't need an indicator at all. But I love the 21 EMA because it does help me with my entries because it's my key entry point. So just try it today. Put it on some charts. Put it on whatever chart you trade. You don't have to send me a message about time tick charts. And listen, put it on whatever chart you want. It works everywhere. It's universal. I love it. Put it on day chart. Put it on week chart. Put it on an hour chart. Put it on a minute chart. Put it on whatever chart you trade. Just try it, right? And just test it out to see if it allows you to see the price action clearly. And not just see the price action, see the current price action. That's so important. The current price action. It doesn't matter what happened 2 days ago. It don't matter what happened at 6 this morning. I need to make the best split decision I can make for the trade I'm trying to take right now. And the 21 EMA will help you do that. And you have to understand the basics, which is that the market moves in twos, and when you put a 21 EMA on there, it's going to help you out. All right. So now shout out to everybody who passed their challenges this week. We had more traders pass their funded challenge this week. And if you are in the funded challenge game right now, you've been having a little struggle, we do have a guy that can help you out with that. Just comment below, give me the guy, and I will send you finally funded, the guy that can help you change that situation today. All right. So I hope this one helps you. I hope you guys understand about the 21 EMA a little bit better. And I hope you understand that you do not need a whole bunch of indicators, right? The best indicator wisdom I could give you is to try to eliminate as many indicators as you can. All right. So my name is JD. And until next time, I wish you increase on the Sutton. Bye-bye.